GST impact on e-commerce industry. E-commerce is a booming industry, and this is enabling the small players to sell their products across the length and breadth of India and earn more money. From the consumer's perspective, he is having a wide range of products at his doorstep at a competitive price. In this process, the buyer and seller are getting benefited, and in between, the e-commerce operator who does not own any stocks but sells on behalf of the seller by providing his infrastructure and market is also making money. For these services, the e-commerce operator charges some amount from the seller. So far it is so good, but the real issue starts from the taxman's perspective. In the whole game, the e-commerce operator issues an invoice on behalf of the seller to the buyer, and on this respective taxes are collected. Now the question raised by the taxman is the transaction between the e-commerce operator and the seller is taxable. There are various disputes on this matter, and the interpretation is even more complicated, like does the transaction between the e-commerce operator and the seller amounts to the sale of goods and VAT is applicable? Or on the commission is service tax applicable? Or is it a composite contract? Various state governments have taken different views on the same and started collecting VAT. These are the complexities in the current tax regulations, and all these have been clarified in the proposed GST. Definitions in proposed goods and service tax. Section 2, subsection 40 defines, electronic commerce means supply of goods and or services including digital products over digital or electronic network. From this definition is clear that the electronic commerce means any supply of goods or services using a digital or electronic network. The word digital network includes any mobile application-based services or website or portal or any other mode where there is no presence of brick and mortar. The definition safeguards future also. Section 2 of subsection 41 defines, electronic commerce operator means any person who owns, operates or manages digital or electronic facility or platform for electronic commerce. This definition is very clear and puts to rest all the disputes between the industry and the tax machinery. Electronic commerce operator means any person who manages or own a mobile application or portal or any other sources from where the supply of goods and service takes place. This definition electronic commerce operator includes aggregators. Aggregator by definition means he does not own any products or services but supplies them through other persons or agents or owners. In the real world, the service providers like Ola or Uber or Urban Clap are aggregators as they provide services from third parties. Websites like Amazon or eBay or Snapdeal sell goods online on their portals, but they do not own the goods, but various individuals supply these goods. Registration under goods and service tax. An individual or any other establishment is required to obtain registration under goods and service tax if the turnover crosses about ₹20 lakhs in all states of India except for the states with a special category, where the turnover is ₹10 lakhs. There are some exceptions where the individual or any establishment is required to obtain registration under goods and service tax irrespective of the turnover, and one such case is if they supply the goods or service through an electronic commerce operator. This is given clearly in Schedule 5 of the Model Goods and Service Tax released in November 2016. GST registration is required to be taken by any individual or enterprise who starts online business or mobile-based business when consideration is received. Taxes applicable under goods and service tax. Supplies within the state central goods and service tax and state goods and service tax. Supplies outside the state integrated goods and service tax. Supplies within Union Territory central goods and service tax and Union goods and service tax. Collection of tax at source. As per the Model Goods and Service Tax Law released in November 2016, Collection of tax at source is applicable on the net amount payable to the supplier of goods or service by the electronic commerce operator. The tax collected will have the components for Central Goods and Service Tax, CGST, State Goods and Service Tax, SGST, and Integrated Goods and Service Tax, IGST, and these elements have to be reported separately in the respective GST returns from time to time. We need to wait and watch for the cess component. Rate. Whenever the electronic commerce operator pays money to the supplier of goods or service provider, on the net amount, GST has to be deducted at a rate of 1%. The rate is 1% as per the Model GST law. Payment of tax. The amount of tax collected by the electronic commerce operator as tax collected at source has to be paid to the government by 10th of the next month. The regular GST taxes have to be paid by 20th of the next month. Reporting. The e-commerce operator has to file a monthly return called GSTR8. For the outward supplies made by the e-commerce operator, GSTR1 has to be filed. The tax paid the e-commerce operator is available as input tax credit for the supplier of goods and services in GSTR2. Input tax credit. The taxes paid to the e-commerce operator are available as input tax credit on commission and other charges levied by them. The TCS withheld by the e-commerce operator is also eligible for input tax credit. Once the e-commerce operator pays the tax, the same is reflected in the electronic input tax ledger maintained in the common portal. Matching of records. The records filed by the electronic commerce operator are matched by the returns filed by the supplier of goods or services. The records of the electronic commerce operator filed using the return GSTR8 will be matched with the outward supplies of the supplier of goods or service provider filed in the monthly return GSTR1. In case of mismatch of the records, the discrepancy will be communicated to both, and if the same is not rectified, the output liability will be added to the tax liability of the supplier of goods or services in case, if the amount of services provided is shown more in the returns of the electronic commerce operator. Once the output tax liability is added, the supplier has to pay the same. Interest will be computed, and the same has to be paid by the supplier from the date of updation of his output tax liability to the payment of tax. Let's see an example on how the collection of tax at source works in a real-time basis. E-commerce operator xyz.com. ABC Limited supplies goods through xyz.com for the month of August 2017 for an amount of Rs 25,000. XYZ.com pays ABC Limited after deducting commission of 10% and TCS under GST 1%. Amount payable by XYZ.com to ABC Limited is Rs 25,000. Less commission to be deducted at 10% Rs 2,500. Net amount payable is Rs 22,500. Now under GST, collection of tax at source at 1% has to be deducted on Rs 22,500. TCS for CGST at 1% is Rs 225. TCS for SGST at 1% is Rs 225. Final amount payable to ABC Limited by XYZ.com after implementation of GST is Rs 20,050 rupees. Impact areas of collection of tax on e-commerce transactions. Enterprise resource planning or accounting packages of the e-commerce operator and supplier of goods and services have to be updated to meet the GST requirements. The accounting software of the supplier of goods or services has to be updated accordingly, and it should be able to track the amount recovered by the electronic commerce operator in an interim account and knock it off once the matching of records and payment is made by the electronic commerce operator. Working capital for the supplier of goods and services. In the case of the supplier of goods or services, the amount received will be impacted to the extent of TCS recovered by the electronic commerce operator, which means there is an impact on the cash flows. The impact of the cash flows has to be assessed by the supplier of goods or services before the rollout of GST and planned accordingly, else the continuity of business may be impacted. Training of the teams of the e-commerce operator and suppliers. First, the e-commerce operator must be aware of the changes of the law under goods and service tax. For this, the e-commerce operator has to have a separate team to understand the changes and train the various teams like the payables, procurement, etc. Once these teams are trained, they have to train the suppliers, as they are mainly from the micro or small enterprises. Compliance costs. The compliance cost under GST are going to shoot up as return filing is only online and has to be filed through goods and service tax Suvidha providers in most of the cases, and for that GSPs will levy certain amount of fees. As matching of the supplier and buyer's records is mandatory under GST, the records have to be matched, else notices will be issued and records have to be rectified accordingly. In order to avoid this, the reconciliation of the buyers and sellers' records should done regularly. Disclaimer. Any views or opinions represented above are personal and belong solely to the author and do not represent those of people, institutions or organizations that the owner may or may not be associated with in professional or personal capacity, unless explicitly stated. Any views or opinions are not intended to malign any religion, ethnic group, club, organization, company, or individual. These examples are based on the model law and author's interpretation of the law and may change based on the actual law passed.